Let's bring on board our guests, and we've got Manas Jaiswal on technicals as well as Sampath Reddy. He is the CIO Bajaj Allianz Life Insurance, who is joining in on the fundamentals. Good afternoon and great to have you. I'm going to come straight to you, Sampath, first up. Let's talk about all that's transpired across the globe with all of the shockers coming in from Donald Trump as well. Crude oil prices on an extreme rise. How are you looking at the situation from an India standpoint?
I think, overall with the changing macro, especially the, crude going up, a lot, especially in the last 10 days, the crude has gone up, quite a lot. Now, that is actually going to be a little bit of a worrisome to the market. And, and also there is a fear that inflation expectation will also now begin to, catch up. That's one other thing. So overall, given that valuation where they are today, I think, we've been relatively cautious in the market for the very short to near term. But on a longer term perspective, things are fine. Maybe, if one were to have a horizon of 3 to 5 years, I think, even at the current level, there's not much of an issue. But, so far the earnings season, if you look at it, earnings season is pretty much in line with expectation. This year the growth was pretty much muted overall for the full year earnings growth wise. But the next financial year, we are all looking for a growth of about 18-20% earnings growth coming back in the next financial year, in spite of the high crude level which they are there today. So overall, I think from a longer term perspective, 3 to 5 year perspective, markets are pretty much good, poised very well for a good returns. But this recent the sharp rise in the crude price and also the expected rise in the bond yields, I think that could put a little bit pressure on the market for the very near term.
Okay, that's the overall, backdrop when it comes to what's going on across the globe as well as when it comes to macros. But give us a sense as to how you've read into the earnings season so far. What have you made of the numbers from the tech pocket, which has seen some surprises on the upside? How have you looked at some of the private banks' earnings? And where do you believe that we could see some potential room for improvement when it comes to Q4 numbers?
I think the Q4 numbers, there were nothing different in terms of trend-wise. There's no change in terms of trend for the last 4-5 quarters that we have been seeing. The private sector financial companies continues to do very well. They're growing in a pretty rapid pace, and at the same time maintaining a good asset quality. So we continue to like the private sector financials. We've also been liking IT services as a sector. Even though whole of last 1 year, in spite of the dollar revenue growth has been good enough around 7-8%, the bottom line growth was hardly anything. That's mainly because margin compression, and that is because the rupee, strong rupee that we had seen in the whole of last 1 year. But all of that is now behind. I think rupee is now beginning to depreciate, and the dollar revenue growth in the range of about 7-8% continues to be there. So this financial year onwards, IT will again come back in terms of earnings growth, where they will deliver a good earnings growth. And also given that they are very very good companies with a very high return ratios and a lot of free cash flows, at a multiple of 15-16 times, even if they have moved up to 16-17 times, I think they're still relatively attractively priced versus other sectors. So we've been liking IT services also, continue to like that. Also, because of the the impending rupee with the rising crude and further expected weakness in the rupee, I think we've been liking the companies that are exposed to the export market or exposed to the dollar revenue. For example, even the base metal, if you look at it, the metals as such as the commodities, if you look at it, the pricing is global. Again, they get the benefit of the the overall weaker rupee, because the domestic prices will be translated. The translation of the international commodity prices, multiplied with the currency rate. So they get pretty much like a full benefit of the rupee depreciation. That sector also we've been liking. In addition to the rupee weakness, the commodities like the aluminum and steel, they are on the upward move in terms of commodity prices, because the global inventory levels are on the downward spiral for the last few years. So because of that, I think the commodity prices, we believe that continues to be good, and we've been liking steel and aluminum companies in that space also.
The e-commerce news that's really keeping us busy here at ET Now, the big billion deal effect seems to have rung for Future Group as well. We're talking about some reports of Biyani striking a strategic alliance with the likes of Amazon and Walmart as well. How are you looking at the overall e-commerce space changing things for the consumption sector? Do you think that this is going to be a big focal point now, and it's something that companies just have to wake up and take notice of and really have a major thrust on?
And a lot e-commerce that are happening today is most of them are in the unlisted space or the private space. We've been not really looking at that segment at all. But as a we've been liking the consumer sector, FMCG as a sector where companies have got a very good return ratios, and company with a strong brand franchise and distribution franchise, they've been doing very well. I think in the consumer space we still prefer to play through the FMCG stocks rather than the e-commerce, because e-commerce related retailing kind of companies, the cash flows are today not very strong, and today most of them are still the burning cash even as we speak. So I think that space is not really we are not looking at that right now. We've been chasing the companies with a good brands and products and cash flows rather than the companies which are building the businesses for the future infrastructure.
How are you looking at the prospects for some of the for some of these companies that are linked to crude oil prices closely, be it the oil marketing companies? Because clearly, while we understand that the government isn't really biting the bullet right now or taking any steps in order to curb the tough implications for some of the oil marketing companies with an excise duty cut, how are you looking at the fundamental prospects for some of these stocks?
I think oil marketing companies also, given that current elections which are elections which are there in Karnataka, I think for the last 15 days, the oil marketing companies have not been actually updating their prices or increasing the prices. I think this is not a very good news for the OMCs, and to that extent they've already corrected quite a bit. Hopefully, after the elections are over, I think the pricing power will come back to the OMCs, or if not the pricing power, maybe government could reduce the excise duty so that the oil marketing companies could continue to recover their marketing margins. I think given that there are quite a few elections lined up, if the crude continues to go up like this, I think OMCs will begin to underperform, even though the valuations are still fine. But I think the rising crude generally very strong rapid rise in the crude prices. I think OMCs will not be able to pass on the prices instantaneously. I think that's why we've been staying relatively away from the oil marketing companies.
Lovely chatting with you. Thanks so much, Sampath, for taking time out and giving us your views on individual sectors as well as the outlook on the markets as a whole.